What's going on, my fellow wealth creators? Matty Ice here. Welcome to another training. Today, we are going to talk about the benefits of using an infinite banking policy to purchase a vehicle. This was the very first thing that I did with my vehicle, with my policy, was purchase a vehicle. I was already in the market to buy a new car. And it was right around that time, or a little bit before, when I decided I wanted a different car. That I started going down the infinite banking rabbit hole. And as soon as I started learning how these policies work and also some of the financial principles that we're going to cover in this video, it was just a no-brainer for me to hold off until I had my policy set up. And I'm going to go through a few bullet points as to why it's so powerful and all the benefits that we get from it, and why I waited to purchase my vehicle until my policy was set up, because there's a lot of benefits to it. So I'm going to go ahead and share my screen because I have a few bullet points that I want to go through here with you guys. All right, using an infinite banking policy to buy a vehicle. Why would we do that? Well, there's a number of different reasons. The very first reason would be to eliminate lost opportunity cost. All right, and the best way for me to explain this is to actually show you some real numbers. Okay, so we're going to use the example of my vehicle when I purchased it. All right, I paid $28,000 for it. I took a policy loan, used that money to purchase the vehicle. Okay, now watch this, guys. This just completely changed my life. Changed the way that I think about money. I understand money, and I have a lot more respect for money too. Now, so the $28,000, and coming back to buying a vehicle, how are we taught usually to purchase a vehicle? Well, it's either to finance it or pay cash, right? Okay, so what are the pros and cons of that? Well, if you get financing, then the argument against it would be now you're paying interest when you don't have to, right? The real problem, though, is that all of the principal and interest that you're paying to the bank is going to the bank. So all of that money is lost forever, not to mention you're paying more than you would because of the interest than if you were to pay with cash. The problem with cash is, yes, you're saving on the interest, but all of that money is gone forever, no longer able to earn interest for you. That is lost opportunity cost. So watch this, guys. When you start playing around with these numbers here, it just gets insane. All right, so let's plug in $28,000 here, and I'm at investor.gov. They got a bunch of different calculators and tools and stuff. You can check it out. All right. Length of time, so I'm 35 right now. Let's go 40 years at 75. Maybe I'm considering retirement, whatever. You can use any length of time here. The longer you go, the crazier the numbers get. Let's assume a 4% interest rate, because typically an infinite banking policy will net 3 to 5% of it'll net that of fees. Not to mention it's tax-free as well. Got to take that into consideration. Let's be conservative here and just do 4%. We're going to do this on an annual basis, and let's calculate this. So here's my question, okay? Did the car actually cost me, if I were to pay cash and I didn't use my policy, did that cost me did the car cost me $28,000, or did it cost me $134,000 over 40 years? Not to mention that we purchase multiple vehicles throughout our lives. And also, even if you weren't to pay cash, if you were to finance the car, all of the principal and interest that you pay to the bank, that money is gone forever. That is called lost opportunity cost. Now, I'm not saying to never finance a vehicle through a bank. I'm not saying that. But I'm saying if there was a much more efficient way to purchase our vehicles, why not do that, right? And this is one of the main benefits of using an infinite banking policy to purchase a vehicle, where we set up the policy. All right, so the money that we were going to use to purchase the vehicle, we put that into the policy first. Okay, so we're really just adding one step here. Then we take the policy loan and then purchase the vehicle. The benefit, though, is that money, it's actually another bullet point here, that money continues to grow uninterrupted at that 3 to 5% tax-free, uninterrupted compound growth. That's how an infinite banking policy works. So we purchased the vehicle, but our money is still in the policy because we borrowed against it. We didn't actually withdraw it. Or another way to explain it would be, we didn't take the money from our savings account or our checking account and just give the money to the dealership or whoever we're buying it from. We put it in the policy first. We borrowed the life insurance company's money, so that money is still growing inside of our policy. That is how we eliminate lost opportunity cost. Let's have some fun here. Let's do 50 years. I'm going to assume that and hope that I make it to at least 85. So by the time I'm 85, that one decision has put let's minus the 28. All right, and that has put and or saved me $170,000. That put $175,000 back into my pocket over the long run. That's also why infinite banking is a long-term strategy. When you're using a dividend-paying whole life insurance contract to implement the infinite banking concept, which is how it's done, it's a long-term strategy. It's not a get-rich-quick thing. You're not going to get wealthy in 5 years or whatever. Hopefully you see what I'm saying. This is a long-term strategy. I'm not saying you can't build wealth during that time within 5 years. I'm saying this is a long-term strategy. This is one of the benefits right here. It puts so much more money back into our pocket because that money is going to continue to grow uninterrupted. Here's some other side benefits, though. There's no application to purchase the vehicle to see how much financing you would get. So when I was in the market looking for another vehicle, before I started going down the infinite banking rabbit hole, I was applying to get financing. And at the time of this recording, interest rates have spiked quite a bit and they're still high. I was getting quoted. The lowest I got was 10%. Was it 10% or 12%? It's 10 or 12% interest on the loan. And my credits, I mean, it's not great, but it's not bad either. That's pretty expensive when you look at the numbers on that. I was quoted as high as 18% as well. So I'm kind of getting off track here, talking about the interest rate. But my point is, there's no application to see how much financing you would qualify for, what your interest rate is. All right, I literally just log on to my portal with the life insurance company. I tell them how much I want. I sign it, digitally sign it, and it's in my account. I don't need a reason. There's no application. There's no credit score involved. There's no tax returns. There's no debt to income ratio. I don't have to provide pay stubs. None of that. None of that, guys. It is such an easier process when using an infinite banking policy to finance these large capital purchases. Now I wanted to segue into the interest rate. I kind of jumped ahead a little bit there, but to reiterate, there's also that arbitrage of interest that you would pay to the bank versus what you pay to the life insurance company as well. There's a pretty big difference. So like I said, I was quoted 10 to 12%. My policy loan interest rate is 5.5%. Now, that's not always going to be the case. If the Fed were to cut interest rates back to zero, could you get cheaper financing through the bank? Maybe, probably. Would it make sense to do that? Maybe. But maybe not. Again, we got to weigh the pros and cons and understand all the benefits that we're getting. Because here's another thing too. I'm going to skip the number 5 here. We'll talk about that in a second. But here's another benefit, guys. The vehicle, my car, it cannot be repossessed by a bank if I fall into hard times and I can't make my monthly payments to that loan. Because with the bank, it's a structured loan. You have to pay that every single month. And if you don't, you can get into trouble, right? Your credit score gets hit. They could eventually potentially repossess the vehicle. With a policy loan against an infinite banking policy, guys, you can pay whenever you want. It's an unstructured loan. If you fall on hard times and cash flow's a little tight, income's a little tight, whatever, you could skip a couple of months and nothing is going to happen. You're going to rack up maybe a little bit more interest, but you could just catch up maybe next quarter or the next month, whatever. You have that flexibility. And there's just something about that gives you peace of mind, especially with all of the chaos and uncertainty in the world right now. And, the uncertainty, like what's going to happen with the economy and the job market and all that stuff. Like there's so many black swan events that can happen. So many different things that are outside of our control, that this gives us control and gives us flexibility. So that if something does happen and it does have an impact on our lives financially, we could take a couple of months where we don't make those payments and we don't have to worry about losing our car, right? That's just one less thing to worry about. I think that's a huge benefit of using the policy. So even if you were to be able to get a lower interest rate with the bank, is what you save worth it to not have all these other benefits? That decision is ultimately comes down to you and your goals, your situation, but it's a huge benefit. Here's another benefit, guys, is you're paying back your own bank. You're recycling your dollars. So every time we make a payment, just gonna switch this up a little bit. Every time we make a payment, or I make a payment on my policy loan, that money is immediately reestablishes the cash value. It shows up in cash value. So if I make $1,000 payment on my policy loan, I now have $1,000 more in cash value that I have access to, again, that I could borrow against. You can't do that with the bank. You can't make payments to a bank and then call them up and say, hey, all those principal payments that I've been making to you, not the interest, because in the same scenario with the infinite banking policy, when you're paying that policy loan, that interest goes to the life insurance company. You're not paying yourself interest. But you can't call the bank up and say, hey, all the payments I've been making, I want to borrow against that again because I want to go invest in this other opportunity. I had an emergency come up. I need to replace my roof. The car broke down, whatever it is. You can't do that. With an infinite banking policy, you can absolutely do that. Every payment you make restores the cash value. So now you can borrow against it again. You're paying money back into your own bank. You're recycling your dollars while it's continuing to get that uninterrupted compound growth. I just don't see on what planet that is not amazing and is not like a complete no-brainer. The last thing that I want to talk about too is just kind of a side benefit is this gives you the power of paying cash as well versus having to get financed through the bank. Usually when you're paying cash, you have a little bit more negotiating power. There's more flexibility. I certainly did. I'm not the best negotiator in the world. I'll admit that. But because I wasn't in a rush, I had cash. I was able to negotiate a little bit, especially with my trade-in, and it worked out in my favor. And I got a pretty good deal on the car. So anyways, I'm going to go ahead and wrap up with that. I didn't want this to be too long of a video. I wanted to just go through the main benefits of using an infinite banking policy to make these large capital purchases. Like, it doesn't even have to be a vehicle. It could be equipment for your business. It could be a number of different things. But whenever we're considering financing, third-party financing from a bank, or maybe we're going to pay cash, but it's a large capital purchase, I want you to think about, what is this really going to cost me? Okay, by doing it this specific way. And if there's a more efficient way to make this large capital purchase, should I do that? Well, a lot of the times the answer is yes, not always. All right, depends on your situation, what's going on. But a lot of the times, these large capital purchases, it's it's just a really good idea to use our own bank to finance those things, and then we recycle those dollars when we're paying that policy loan back. It's just awesome, guys. So that's why I love infinite banking. I love the infinite banking concept. I love dividend paying whole life insurance. It has just completely changed my life. I haven't even had the policy that long, and I'm already doing just some really, really cool things with it. I'm working on my second policy right now, so I'll definitely keep you guys posted on that. But either way, I would love to hear your feedback. What do you guys think about this? Drop some comments down below. Any questions that you have, make sure you check out the additional training that I have in the description as well. Got tons of stuff on infinite banking to help you along your journey, educate you. And yeah, I will talk to you guys in the next video. Hope you're crushing it to your success. Matty S is out.